Kembali lagi di Closing Bell, Lembaga Moneter Dunia (IMF) menyebut bahwa rally pasar saham global yang tengah terjadi rapi muncul setelah investor bertaruh. Berdasarkan laporan IMF, investor bertaruh pada stimulus besar-besaran bank sentral di seluruh dunia, di mana kondisi tersebut belum pernah terjadi sebelumnya. Dan investor tampaknya mengharapkan pemulihan ekonomi secara V-shape, sehingga menciptakan perbedaan antara kondisi pasar saham dengan prospek ekonomi dunia. Bank sentral utama juga di dunia telah membeli aset senilai 6 triliun dolar Amerika Serikat, 2 kali lipat yang dilakukan pada tahun 2008, dan dukungan ini membuat harga saham kembali pulih 85% dari level sebelum krisis. Tetapi IMF mengatakan bahwa tidak ada jaminan suasana optimistis akan terus bertahan. Dan kita akan bahas kondisi dari pasar saham global serta potensi emerging market bersama dengan Chairman and Managing Members of Great Hill Capital Thomas J. Hayes langsung dari Big Apple, New York City. Hi Tom, appreciate for your times. We start to the U.S. market now after the Trump's government rejected the claims given by China in the South China Seas. Thus, it is indicates the more tension between U.S. and China. How do you see about that?
Hi Maria, thanks for having me. There are a number of tensions between the U.S. and China. I think the most important thing that we need to keep focused on is so long as the terms of the Phase 1 trade deal are carried out, the rest of it will probably just be rhetoric. For instance, you saw in Hong Kong, there was not much action taken with regard to that. With the aircraft carriers in the South Sea, this is some tension, but I think the core of the relationship centers on the Phase 1 deal terms and following through with purchases, and so far that's gone according to plan.
Okay, and what is your view in the stock market overall in that conditions?
Yeah, I think there are basically three themes happening in the United States. Number one, the economic data continues to outperform. So if you look at the Citibank Economic Surprise Index, it hit an all-time record, and that measures the percentage of economic data that are coming in better than consensus. That's number one. Number two, which is bullish, and you're gonna see that flow through to Q2 earnings. The second thing, we've had a short-term concern in the Sun Belt area, or some of the southern states in the United States had short-term spikes in COVID cases, and that's the bad news. The good news is in every single one of those states, cases are now coming down again with the exception of Florida, and they expect Florida. So what was a short-term shock now is starting to come down. And the third basic theme of the United States markets is this push and pull between value stocks, the lower multiple stocks, and growth stocks. And we saw value stocks outperform in May when cases were coming down and people expected a quick recovery. And then recently, tech stocks have been outperforming at high multiples because as the cases spiked up, people anticipated slower growth economy, so you have to pay up for the growth with the tech stocks. And we're hopeful now with banks starting their earnings this morning that we could see better than expected earnings and a move back into cyclicals and value, which ordinarily outperform coming out of recessions.
How do you see the U.S. economic growth in second quarters as Singapore has release of economic growth in second quarter 2020, and which at least 12% annuals and 40% more quarterly? How do you see the U.S. economic growth in second quarter?
Yeah, so for the second quarter, most market participants know those numbers are going to be terrible. That's going to be kind of the write-down quarter. But the stock market is a discounting mechanism. It looks to the future. And right now, the consensus growth rates for 2021 are plus 5% or more GDP, depending whether you look at Fed consensus estimates or Goldman Sachs. So the market's starting to discount the future growth. What happens in Q2 is kind of rear view mirror, and the market has already discounted that in March and April.
IMF says that global stocks market rally represents a gamble by investor. This is to create a divergence between the pricings of the rich in financial markets and economic prospect. Do you agree about that?
Basically, what's happening in the global markets is that you have about close to 15% of global fiscal stimulus, 15% of global GDP in fiscal stimulus. So as the cases get under control, the market is starting to discount a very positive economic future. And that's why you see many of the indices across the world are outperforming in the last couple of months. It has a tremendous amount of stimulus, liquidity, and aid on a global basis. In the United States alone, we're about a $20 trillion economy, and close to $10 trillion of stimulus, liquidity, and aid has been authorized for the recovery. So as the cases come down, I think you're going to see really tremendous global growth in 2021. And we're starting to see that in a short-term rally in emerging markets. As the US dollar has come down a little bit, emerging markets are starting to do tremendously well. And Maria, I think that's a tremendous opportunity moving forward. If you look particularly in Indonesia, you have a very young population and growing population with 55% of the economy from household spending. So as we recover globally, commodities are going to do well, and Indonesia is going to do exceptionally well as well.
How do you see the Indonesia, the emerging market, the potential for the next, maybe not 2020, maybe 2021, for that investor choose to the portfolio asset in the middle of these kinds of recessions condition?
Yeah, well, I think as the recovery comes, the demand for commodities is going to come back. That's going to help Indonesia. Potentially a slightly weaker US dollar is going to help emerging markets in Indonesia. And it's interesting, if you look at the overall emerging markets indices, you can purchase the emerging market indices in 2020 for the same price that it was trading at in 2007, 13 years ago. The difference is that the emerging markets economy as a whole has grown tremendously over those 13 years, but you can still get it at the same price. So looking forward, I see tremendous opportunities in Indonesia, in the whole of emerging markets, and you're going to see that also reflected in increasing commodities demand in coming years, probably similar to the early 2000s over the next 5 to 7 years.
Okay, right now, foreign net sales conditions are still quite high in Indonesia. What is the view for foreign investors to see about Indonesia? Just only wait and see, or what are they waiting for to see Indonesia deeply?
Well, I think right now there's a little bit of fear globally in the market. Emerging markets are slightly higher risk. But as that growth comes back, I think you're going to see capital inflows, particularly in markets like Indonesia, because you're perfectly positioned with the young and growing population, the consumer spending, and I think Indonesia is going to see a bulk of the growth in emerging markets in Asia for the next 5 years. So you're in a very, very good position. We just have to get through this short-term uncertainty with COVID. But, we got great news yesterday from Pfizer that their vaccine is going to be fast-tracked and should be ready for approval by the end of October, which means, we're going to have that type of vaccine situation around the world by the end of this year, latest early 2021. And that's going to set things up for fast growth globally, and particularly in emerging markets like Indonesia.
Okay, so how do you see, how can the investor keep safe their money right now in this uncertain time like this?
Yeah, so that's a great question. And your producer said, is cash the best or bonds the best?
Yes.
I think the best is actually to buy the highest quality equities, because, if you keep your money in cash, eventually it gets inflated away. If you keep your money in bonds, which are at historic low yields, when yields go up, when growth comes back, you're going to lose principal. So the best is to be in the largest, highest quality, durable franchise equities that pay you a dividend to wait and sit through the short-term volatility. Because, even if you have a double dip, which I don't think we're going to have, if you're in the biggest companies, when you have a short-term contraction, it wipes out the competition and they come out of the recession even stronger. So if you have high quality, blue chip equities with growing dividends, sit through the volatility, that's your safest bet. And that's going to be a bet against a hedge against inflation as well, because they'll be the companies that have the pricing power moving forward. So that's where I would be defensive. Large cap, highest quality, equities, and you'll be good to go.
Okay, Tom, we'll take a break a little bit. We'll continue the discussions after the commercial break, dan dialog akan kami lanjutkan kembali usai jeda. Tetap bersama kami di Closing Bell. Kembali lagi di Closing Bell dan kami masih bersama dengan Chairman and Managing Member of Great Hill Capital, Thomas J. Hayes, langsung dari New York City melalui sambungan Skype. Tom, we'll continue our discussions, maybe deeply your review or your view about the potential sector the investors see for the 2020 and for the 2021 for the next year.
Yeah. Correct. So I think one of the things that we have to watch here, Maria, is going to be U.S. bank earnings today. And they'll be coming out in just a few hours. And in line with what I was talking about, banks represent one of the greatest values. They're trading at a discount to book value right now. They pay dividends greater than the 10-year Treasury. So as they come out, if they dip after earnings, that's an opportunity to buy. That's a safe and healthy group to be in for the long term. Historically, they trade at a slight discount to book to a multiple of book, and right now they're trading at a discount. It's a great time to get into the largest, highest quality banks like Wells Fargo, JP Morgan, Citibank, and Bank of America. As far as Indonesia goes, one of the things that we forgot to mention, looking at the consumer confidence numbers in Indonesia came in this month much better than expected at 83.8 versus 77.8. So I think looking out as we talked about before the break, the next 3 to 5 years, I think Indonesia is going to be a tremendous opportunity coming out of this COVID crisis.
Okay, and now we are looking to the earnings seasons right now. Financial statement data in second quarter of the first semester 2020. The analyst says it's not a good results. Maybe the worst will be the worst in the first, worse than the first quarter. I mean, how did you see it?
Yeah, I think you saw the IMF, for instance, come out last week and downgraded global growth. But, they've always been excessively pessimistic. If you look at it historically, they rarely upgrade before the fact, only after the fact. I think as you look forward, you are going to see global growth. And as I shared with, close to 15% of global GDP in global fiscal stimulus. We've never had that before in history. So the minute we can get the global cases down, like you've seen in China, like you've seen in Europe, like you've seen starting to see now in the United States, we saw it in the epicenter states, New York, New Jersey, Connecticut. Now the Sun Belt is starting to come down a little bit. It was up for the last 2 weeks. Once the cases are under control, we'll have a vaccine before the end of the year. We'll have better treatments. I think you're going to see the global economy roar with the amount of fiscal stimulus, monetary stimulus, and coordinated activity like we've never seen before. In most past crises, Maria, the government policymakers around the world would see the plate falling off the table, the economic plate, and it would crash into 1,000 pieces. And then it would take them years to put it back together, to glue it together. This is the first time in the history of the world that global policymakers on a coordinated basis saw the economic plate falling off the table. And rather than watch it crash, they put a trampoline underneath so that the plate could bounce back up and be placed on the table. They put the stimulus down, they put the liquidity down so that we wouldn't have to wait years to recover. Once the cases are under control, we can now recover in months. And I think that's going to be a great thing globally to get jobs back, to get the growth back, to get demand for commodities for the emerging markets. And it's all going to come together over the next 6 to 9 months.
Next, we are talking about the Fed. How do you see the opportunity of the negative rate from the Fed in that conditions right now?
The opportunity for which?
For a negative rate for the Fed,
so
the Federal Reserve.
For the Federal Reserve. So the
Yes.
Federal Reserve has done a tremendous amount. They've committed to purchasing $80 billion a month of securities, mortgage-backed securities, and Treasury securities. They just published their permanent open market operations schedule for the month of July. They're going to do about $12 to $14 billion today alone, and then $8 billion a day thereafter. So they're sticking through with the plan, and they basically said, we're going to do whatever it takes, and they have a dual mandate, full employment and price stability. So they basically said that we're going to continue to do asset purchases, to add liquidity to the system, to do the Main Street lending program. And I think they're going to keep their foot on the pedal until you see unemployment at the mid-single digits. Okay, so it's come down from 14 to 11.1. Our jobs reports have been phenomenal in the last 2 months, but there's still more to go. We've gained back a third of the jobs that were lost, but I think we're going to see another third of those jobs regained before the end of the year, and that's going to be from the Fed continuing with asset purchases, and also what they haven't been able to achieve is the price stability, meeting their inflation targets. And they've talked about having it be symmetrically met, which means they could run hot. In other words, they could run inflation at 2.5%, 3% for some time if they can get to those levels before they even think about cutting back on that stimulus. So, with $3 trillion of balance sheet expansion so far, they have unlimited firepower to keep things going, to help bring inflation down. That should keep the dollar in check, which will help the emerging markets. And all in all, we've got the right leadership at the Fed doing whatever it takes to help the U.S. economy, which is going to help the global economy. And again, as we have the treatments and the vaccines later in the year, everything's going to come into place, coupled with the stimulus and the liquidity provided by global central banks and global policymakers. So we're in good shape.
Okay, we're moving on to the another sectors, maybe the commodity sectors. How do you see the opportunities of the commodity sectors? We'll see that gold commodity prices have reached the levels of $1,800 per troy ounce, and this just reminds me of 7 or 8 years ago. And this is momentum for investors to diversify their asset and choose gold to the safe haven.
Yeah, so I think it's interesting, and I mentioned earlier with emerging markets, if you look at the early 2000s, about 15 some odd years ago, 15 to 20 years ago, and you saw that commodities were in a very depressed situation from 1999 to 2002, 2003, and then from 2002, 2003 to 2007, 2008, you saw a move in the commodity basket like you've never seen before, and saw growth in emerging markets. And I think we're right on the cusp coming out of the COVID crisis. Over the next 5 years, we could see a level of growth with commodities, with the amount of supply that's been taken offline as far as energy production goes, with the lack of investment for the last 5 years, and with growing populations in the emerging market and increasing demand. I think when you look at the commodity basket as a whole, if you're looking to hedge inflation, that's somewhere you want to be. And you want to be in the commodity producing countries like Indonesia, like the emerging markets, et cetera. And I think you're going to be the beneficiaries of increased demand and the benefit of that moving forward. As far as gold, I personally, I'm an equities guy. So I like buying assets that throw off cash. I like producing assets like Warren Buffett, the greatest investor here in the United States. He always talks about he'd prefer to buy a business that throws off cash than gold. But certainly, gold has a position in many portfolios as a short-term inflation hedge. But I think I'd rather have the full expression of commodities as a basket or commodity producing companies going forward versus just the hard asset itself.
Okay, Tom, just give us a little bit your insight about the market projections for the third and the fourth quarter in 2020.
Yeah, so for sure, Maria, I think we're very well positioned here coming out of Q2 earnings. I think for certain you're going to start to see new highs. We've already seen new highs in our tech sector. If you recall, I said, money flows into tech when people anticipate slower growth, I think you're going to see a move into cyclicals, value stocks like financials, industrials, materials, once people believe the recovery is real. And as a result of that, I think you're going to see new highs in the S&P 500. I think you're going to start to see new highs in the Dow Jones towards the back half of the year. And that's going to set things up, bring back confidence, and the perfect combination of the stimulus, of the treatments, of the vaccines all coming together by Q4 and Q1 2020, where people are projecting over 5% growth in the United States and global growth around the world. So things are setting. I think the worst is behind us is the theme of the message, Maria.
Okay, we hope so. Thank you so much, Chairman and Managing Member of Great Hill Capital, Thomas J. Hayes, for our discussions. Thank you once again. Dan diskusi tadi sekaligus menjadi penutup program Closing Bell. Hari ini saksikan terus CNBC Indonesia melalui cnbcindonesia.com dan Transvision Channel 805. Dan Anda juga bisa saksikan CNBC Indonesia via UZ TV di Home. Saya Maria Katerina pamit. Terus saksikan CNBC Indonesia Beyond Business. Sampai jumpa.